Hi, welcome to the Market Alert for Wednesday, the 29th of September 2021. So, main headline is dangerous. Jerome and doomsaying Janet spark bond, stock bullion and Bitcoin battering as the dollar soared to 10-month highs as stocks suffered biggest day in 7 months. Interesting with the relationship between the precious metals and the dollar yesterday as well, which we'll look at in more detail. Yellen says debt ceiling drop dead date is October the 18th. We now estimate that the Treasury is likely to exhaust its extraordinary measures if Congress has not acted to raise or suspend the debt limit by October the 18th. So make a note of that one for your diary. Implied volatility up sharply yesterday from 1516 to 1994. That's a big move to the upside. But then when you look at how the market fell during the Dow session, then no surprise. And something else I thought I would actually put in the alert for you. I created this chart yesterday, and this is the crude oil and UK fuel prices comparison. And if we go back to here, which is 2008, you can see that crude oil was $144 per barrel. Petrol was $1.33 and diesel was £1.19 per litre. Now, that was when crude was $144 per barrel. At the moment, it's $80 per barrel, or $79 as of Monday's close. And you can see already that we're at 138 and 136, which is way beyond what we had in 2008 when crude was $144 or $445 per barrel. So if you want an inflation scenario, then if the crude oil goes back to 144 per barrel, then I dread to think where this the price of diesel and petrol actually goes. Also notice that during the 2013-2011 period as well, when crude oil was $100 per barrel, we were paying 148 and 142. So we got a bit of an idea at this point, but crude oil has continued to move lower, now coming back $80 per barrel, and we're already sitting at 10p off the high of 2011-12, when crude oil was actually another $40 higher than it is now. So that's where inflation comes from. And of course, all of the idiots queuing and buying over the weekend is only going to add to this, because it creates a situation where you end up with racketeering amongst the fuel companies, because they can do this. I did see the highest price yesterday when I had a look around was £1.58 per litre. But I thought you'd just be interested to see this. I've been meaning to do this for a long time, just to show the comparison. And all this data is from the ONS as well, if anybody's wondering. And then historical data from Yahoo Finance for the crude oil. But it paints a very interesting picture, particularly as $79 per barrel. And we're already back to those highs of 2008 as far as fuel prices are concerned. Like I say, we have paid more, but then also crude oil was lower. Again, it just shows the racketeering of the government and the taxation as well, doesn't it? So, but yeah, an interesting situation that could evolve here. Certainly is very, very inflationary if it does. Meanwhile, news for today, we've got US news only, pending home sales. Well, I say only. First part of the news is pending home sales, crude oil inventories, and then we've got central bankers again. All three are out speaking at 4:45 p.m. So that must be some sort of global Zoom thing then that they're actually doing. That starts at 4:45. Let's have a look at the Dow. For yesterday, you can see that we had a major sell-off in the Dow. Market moving lower, back through all of the averages, but finding some support overnight. Let's have a quick look at adding some upside targets, as it looks like it's going to try and bounce back. These are the upside targets for any sort of bounce off yesterday's move or reversal back to the upside. And on the downside, we'll just draw in some down here as well. We can see that we came back to 50% of the move there. Let me just get rid of this. There's your 50%. So any break below this, if the market does turn south, you're then looking at these targets all the way down to obviously the low that was put in this time last week. So let's have a look at the bigger picture of the DAX. A similar picture, the market stopping at that 89% with the German election on Monday and moving sharply lower yesterday. Again, the market stopping at 62% for the DAX, and again, prices looking like they're a moment they're attempting to move back to the upside. So let's just draw in some upside targets from this high to this low projected back. And there are your upside targets for this market moving back. Should it find any resistance at these levels, then at least you are aware of them, along with the pivot points and the BRNs in the charts. In the 30-minute DAX, you can see that it's sold from the start and then held around lunchtime and then had a second wave to the downside, which you can see here. And overnight the market's just traded in a sideways range and attempting to move back to the upside there. In the 2-minute chart, the recent activity, you can see it's already kicked off a bit earlier than normal. It's 6:45 at the moment, and the market attempting to move back to the upside there. And finally, in the metals, before we have a look at the DAX in more detail, you can see that silver yesterday moving back down to that 89% retracement, holding and actually coming back. I actually hedged the positions that I've got yesterday morning just in case we were going to break and drop down that $2 that I'm looking for. But I managed to get to break even, then the market reversed and took me back out, and that's when Powell was speaking. So so yesterday morning, as the market started to move lower, I hedged a position, and then as soon as Powell started to speak, even though the dollar went up, which again I'll look at in just a second, silver managed to stage a rally along with gold. If you see this in the 30-minute chart, it's a bit clearer there, moving back to the upside, and now it's just starting to move as well. Maybe the down move is over in this market, but we'll wait and see. US dollar moved up sharply yesterday, and this is what I was on about in the intro of the market alerts. Normally the relationship and the opportunity by JP Morgan and Co is to actually slam the price of silver, and when the dollar rises, but you can see the dollar rose there, along with silver also managing to maintain a move to the upside, along with well, actually, gold didn't. Looking at that, gold just barely managed to hold and is coming back on the overnight. So yeah, that's an interesting picture there. Right, let's have a look at the detail of yesterday's trades in the German DAX. Okay, so the futures market opened and sent the market to the downside. We've got the 200 MA above the 20 bar and the 5 below. So it was already bearish when the cash market kicked in. It attempted to move higher initially to get off that low. We always see the market try and support the previous day's low, but on this occasion that wasn't to be the case. They tried to bring it back. You can see all of the buying there, but eventually it succumbed to the selling in the market, and price is trading down to the S2. Stopping here with huge volume, which you can see here, all this green volume here, and then trading sideways, and again having another move to the downside. This area here, you can see that prices closed once above the 20 bar moving average, then reversed, maintaining that relationship of the 20 below the 200 and the 5 below the 20. You can see them buying back in at this level as well. You see these clusters and climatic volume. We then had a buy signal. The market filled this. I thought it was going to be stopped out, but eventually the market came back and traded up to the scalp before finding some more weakness. And then mid-morning, you'll see the market drifting back down again as the Dow came on stream on the electronic session. As the New Yorkers woke up, and then we get to the afternoon. We had Powell speaking, We started off with the market trying to move to the upside. We had a buy signal there, and then it just ran into selling, with the market then reversing, and it looked weak, but hung in there. Then we had a sell signal, and then the market reversed. So having taken the loss, it was only right to see if this would actually continue lower. And as I kept my eye on the Dow, that fell out of bed, and that allowed the market to move sharply lower here to grab some profits off the table here and cover the a loss on the first trade, more than enough to cover that. And then of course Murphy's Law, because Powell was speaking, it was wise to get out of the market. But I'm just checking the daily chart to see where prices are. 62% there, and then the market has a run down to the final BRN there, down at the 15,250 level, and then starts to make its way back. We have another potential sell that's not filled, and then we have a buy signal which trades up to the scalp there before prices just drift sideways. So all in all, not bad. It's just that one disappointing trade at the start of the session. But the Dow was just falling out of bed, so it was inevitable that the DAX would actually follow suit. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.